Good morning, everybody. Uneducated Economist here. So we got two people watching with two thumbs up. Thank you so much for hitting that thumbs up when you come into the live stream. Today we're going to be talking about the recessionless recession. That's what I coined this, or term this particular recession that we are experiencing. As many people have been saying for quite some time, we are going into recession. We're going into recession. And a lot of people saying, hey, we are already in recession through all these economic indicators. And nobody knows exactly what's going on because the unemployment hasn't risen. And yet here you got the Federal Reserve talking about lowering interest rates, and that always predicts, like, or no, predates, and then, you know what I'm trying to say, is foretelling of a, there we go, foretelling of a recession. And nobody knows exactly what's happening out there. So I'm going to talk about what it was that I was seeing taking place a couple of years ago during the pandemic that I think might be explaining what it is that's happening right now. Because I had said it a while ago, we are going to experience a recessionless recession. And now it's very difficult to understand what it is that's happening right now, as most people think about a recession as two things, right? Two things are the worst part of about a recession: is you lose your job and the corporations get bailed out. Like, that's the biggest part, right? Everybody loses their mind and they get pissed off when government bails out the corporations. So what we are experiencing, or what we were leading up to a couple of years ago, was historically low unemployment. We had this incredibly tight jobs market. There was all kinds of jobs available. And now, as layoffs started to take place, those people who were getting laid off were finding jobs over in the service industries, back to flipping burgers or serving drinks, or doing whatever service industries that they happen to be in, going back to work at the hotels, going and doing their construction jobs, or doing whatever. There was a return back to that missing employment that was happening out there, right? And so when we look at it in that fashion, the unemployment's not going to rise significantly during that time. Right? And this is something that I said, even if we go into a recession, even if we have layoffs, the people are going to lose. I mean, even if it's a good job that they had and it's not a good job that's available, it's a job. Right? And so if it's a job that's available, generally people will take a job so that they can pay their rent. And so this is why you're probably not seeing the unemployment rising significantly as we're coming out of this incredibly tight jobs market. Now, on top of that, we also just came off of historically low interest rates, right? Historically low interest rates that corporations had gorged on during the pandemic. And now this is something that we had talked about many times as not only a credibly threatened enhancement to the corporations through the purchasing of their debt. So basically, corporations issue out bonds, very much like the United States Treasury will issue out bonds. Corporations issued out bonds during the pandemic that were in high demand, super high demand. And those interest rates that they were paying out, or the yield on those bonds, had fallen significantly. So now these corporations are gorging on incredibly cheap debt, right? So they're selling all their bonds off and getting all this cash. Well, lo and behold, a lot of them are still sitting on that cash holdings. And in fact, a lot of that cash holding has moved into what it is that's now paying them an interest rate. Right? So now they have it in short-term positions that pay a very high interest rate to them. So this is something interesting to think about. Here during the pandemic, they were able to sell bonds at an incredibly low yield, gorging on all this debt. Now they have to pay, right? They have to pay an interest rate on that. But now they have all this cash. They have positioned it into a short-term uh, position in cash, right? So it's very close to cash, meaning, like, they haven't taken out a very long-term debt with it, putting it in, locking it up for a long term. They've only locked it up for a very short term, which is still a very, very much considered a cash position, right? Because it will eventually be cash in a very short term as opposed to a long term. And so with this, they are now getting paid an interest that is more than what they are paying on their debt. And if I got the article right now, I don't know if I necessarily believe all the mainstream media, but if I got the article right, it's saying something of like 10% of the non-financial companies within the S&P 500 are in this position, in which that they are getting paid more on their debt or on their cash position than they are paying out on their debt. Meaning, like, they can just sit there and not even be a profitable company as long as they have that position, right? I mean, I'm sure that they're probably a profitable company. That way they can hold that position. But still, this is what a lot of these corporations are in. They're in this cash position like this. Right? And so I think about like what happened during the pandemic that created that moment, right? Of which that the yields on those corporate bonds had fallen dramatically. And now, if you had followed my channel for any length of time, this is something that we have discussed many times. And that during the pandemic, there was the unusual and exigent circumstances that the Federal Reserve then was able to deploy something called the special purpose vehicle, right? And this was, I believe it was Federal Reserve 13.3, right? I think this is like the, the law or whatever it was, the rule of it. However, one of these lending facilities that they had set up, this is where like all the backstopping of all the entire financial market came from. So as the fiscal stimulus was being deployed by the government, so all the checks going out there, all the enhanced unemployment, all the stuff that the government was doing, the Federal Reserve was in the background in the financial markets, backstopping all the financial markets. Basically, anybody who wanted to take out a car loan or a credit card loan or any kind of loan out there, they had a lending facility back there that was going to backstop that market. So ultimately, it was keeping the markets from freezing up. Now, one of these lending facilities that they had out there, and these can all be discussed differently, but one of these in particular was a very unknown, right, but very well publicized at the moment that it was deployed, or just before it was deployed, I should say, was something called the corporate debt lending facility. And this is really important to wrap your head around, is that the corporate debt lending facility could only exist in unusual and exigent circumstances, meaning that if it wasn't for the pandemic, this never would have happened. Now, the special purpose vehicle is an entity that's separated from the Federal Reserve and the Treasury. But combined, they funded this thing with hundreds of billions of dollars and then shouted out to the mainstream media that they were going to use this to buy up corporate debt. So if you can imagine, a corporation out there is issuing out bonds to try and get funding. Like, they need to borrow money. The way they borrow money is they, write up IOU over the next 10 years, this much interest rate, right? And they create this bond. This is what the Federal Reserve said that they are going to be going out and buying. And the markets lost their mind, right? And I know I was one of them saying it. It's just like, hey, they are picking the winners and losers. This is like ultimately illegal. They cannot be dabbling in the corporate debt market, but yet they have this special purpose vehicle set up to buy into the corporate debt market. And now the idea spread like wildfire, and everybody was just like, holy crap, here it comes, right? And the Federal Reserve's like, oh no, we're going to be buying the fallen angels, right? I forgot the term for it. The fallen angels. These are the corporations that shouldn't be experiencing this sort of thing because of the downturn. So they're going to be buying into the good corporations and buying the fallen angels, is what they said. And now all this news and information and attention was brought to this particular lending facility, and people started buying into corporate debt, thinking that they would be able to sell it off to a known buyer of the Federal Reserve. Like, if they said, hey, we are buying it, then the market says, I don't have any problem buying into this position knowing that I have a definite buyer of this particular asset, so I am very risk-free in my decision to buy this stuff knowing that they are going to do it, right? You see what's happened here? So now this special purpose vehicle is going to be set up, the attention brought to it, people started going out and buying an insane amount of corporate debt, right? Thinking that they're going to be able to front run the Federal Reserve. And by the time this lending facility was up and running, the corporations had pretty much found all the funding they needed. They had funded themselves. already. The corporate debt lending facility was established, was funded, and did purchase some debt, but it hardly bought any. And all these corporations gorged on an insane amount of cash that the market provided to them with the belief that the Federal Reserve and that special purpose vehicle was going to be there. So now these corporations were sitting on a ton of cash, a ton of it. And now you can see it today. Just take a look at the article I leave down in the description. And now one of the ideas behind this is that if we do go into a market downturn, right, these guys are sitting on cash, and if we have stocks that are falling, they have the cash position to buy back their own stock, actually creating a floor for the stock market to be in. Right? I mean, this could be one of the ideas. A lot of people say, like, why haven't we had the recession yet? Well, it's because we were already pre-bailed out, right? The pandemic was a pre-bailing out of the recession. Everybody says they were dealing with the pandemic. No, they were dealing with the coming issues that were obviously set into the markets. But when you pre-bail it out and then say, oh man, okay, may happen, may not. What's the worst part about the recession? Bailing out the corporations and unemployment rising. Well, if unemployment doesn't rise significantly and the corporations are already sitting on their cash, well, what would be bad about a recession? Right? One of the articles I leave down there in the description was, 45% of the known recession indicators have been triggered, right? But yet here we are still wondering where the recession's at. So, a lot of times I think about what it is that the Federal Reserve was looking for to save their monetary policy, and it's now becoming pretty obvious to me that they needed the idea of inflationary scenario. They needed it. It was a well-orchestrated, planned out gaslighting of psychological warfare of mass proportion. I could not believe how well they were able to pull it off. It was amazing. It was to look at it in a non-biased form, to just to be an observer of it, to sit back and look at it from a distance and say, okay, how is it that you're planning to do this? Like, to not be critical of it, to not be anything, just to be an observer and say, you were sitting in 2018 desperately, this is the Federal Reserve, right? In 2018, the end of 2018, desperate for an inflationary scenario to save their monetary policy. And knowing that they had no room to adjust interest rates to stimulate. They had Fed funds rate up to 2.5%, and they knew a recession was coming, and there was no way a dropping of 2.5% was going to stimulate the economy. And without something of the pandemic or a war or some sort of major crisis taking place, they would have had no reason to deploy all those special purpose vehicles and all the stimulus that came during the pandemic to cover up the recessionary event that was coming. So now they have pre-bailed it out, and people wonder why it hasn't occurred or why it isn't coming. It's because they knew it was coming, and they knew it was going to take a lot to continue on with monetary policy, knowing that their interest rate adjustments was going to fail. They had to have the inflationary scenario, and they got it. Totally got it. Monetary policy strategies for a low neutral interest rate world. All right, let's go take a look at the super chat real quick. The searcher, $5. Thank you so much. What do you think the Fed's ultimate plan with all of this is? I don't know if they have an ultimate plan. Like, here's the thing. Their ultimate plan, right, is to make sure that they provide enough liabilities to meet the demand for their liability. Now, that is a very, very tricky thing to understand. And then it's also a very tricky thing to come up with the strategy of how it is that they conduct that, right? So they have two things that they're doing here, right? They got the monetary policy for the Federal Reserve, American economy, right, as everybody knows it, right? The Federal Reserve System and all that. Then they also are the provider of the world's currency, the world reserve currency. Okay, So now here's a very tricky thing that they have to conduct. Be able to, again, provide a monetary system, fiscal responsibilities, financial Federal Reserve system to a single economy out there, the American economy, right, the United States. And then at the same time, the world is saying, hey, we need your liabilities to do world trade. And how are you planning on providing the world with that, right? So now the Federal Reserve is looking out there at the world and going, okay, we got two tasks to do at the exact same time here. We got to provide the world with the liability, the cash, the Federal Reserve notes, right? The reserves, the bank reserves, in order to do business with. And we got to be able to maintain this American United States, economy. Okay, two different things going on here. Okay, interest rate adjustments, cash levels, and then also world reserve currency demand for liability issue. Yeah, this isn't going to be easy. Okay, let's see here. Well, if we're going to have a huge demand for our liabilities out there, we need to have something to buy to put on our balance sheet in order to provide the world with that liability. What is it that we have out there? U.S. Treasuries. That's about it. Right? There's really nothing else that suits the position of the Federal Reserve to put on their balance sheet to provide the world with liability. So as the world is demanding the cash, the Federal Reserve notes, the reserves, as the world is demanding that stuff, they got to figure out a way to provide it to them, which means that they need to put something on their balance sheet so that they can put the liability out there. They need an asset. That asset is the U.S. Treasuries. It can be mortgage-backed securities. It can be SDR. It can be gold. It can be, quite a few things. It's U.S. Treasuries. That's what it is. It's U.S. Treasuries. And so now the world is demanding these liabilities out there, right? Which puts pressure on the United States in the sense that if the dollar rises, the economic exports, right, that leave the United States, so that economic interior of the United States starts to diminish on a stronger dollar as the world has not the ability to buy the domestic products from the United States. So a strong dollar hurts. So if the world is demanding the dollar, how is it that the Federal Reserve says, okay, well, hey, hold on, don't demand too much of it or you'll screw us up over here. Right? We need to weaken our currency as well in order to increase our exports. But they're demanding the dollar, which increases the strength of it. And the Federal Reserve says, okay, well, we need to provide the world with these dollars. What is it that we need to buy? We can only buy the U.S. Treasuries, which is driving the United States government even deeper into debt if they are to provide us with those treasuries. So now the Federal Reserve is stuck in this task of like, okay, we need to provide these people with liabilities in order to keep the dollar from growing that much stronger, which destroys the United States exports. Very difficult task to do when you have the one asset that is provided to the Federal Reserve to purchase is putting the United States government ever deeper into debt. You see this problem that they're facing here? See, this is why I think that the BRICS nations is kind of like a brainchild for the Federal Reserve to relieve a lot of the pressure for their liabilities. And like, here, man, you guys go do transactions. Stop asking us for the liabilities, man. We got too much going on here with the United States going into debt. They're on an unsustainable debt path. What is it you expect us to buy in order to provide you with this dollars? Like the Federal Reserve needs to buy something. They need to put something on their balance sheet, right? So they have, just like anybody else, they have assets and liabilities. And on the balance side or asset side of the balance sheet, the majority of it is those U.S. Treasuries. Now, if they were to buy something to provide to the world for a liability as they needing to buy an asset, what is it that they're going to buy? They could, and they have stated that they could buy the debt of foreign nations. Think about that. Like instead of buying U.S. government, U.S. Treasury debt, that's all here in the United States, the Federal Reserve, the central banking system of the United States, already has the legal authority to buy foreign debt. Put that on their balance sheet and create a Federal Reserve note, a U.S. dollar. Is that right? Is that exactly what they can do? Well, I mean, Ben Bernanke stated that back in 2002. In a speech talking about deflation and how to prevent it from ever occurring here, because deflation is the bigger scare than it is inflation. Inflation is what the Federal Reserve desperately looks for and needs, and people don't believe that, but yet it's stated right here, monetary policy strategies for a low neutral interest rate world, given by John Williams, the New York Fed president, saying this exact thing. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. And it all stems from a very low neutral interest rate. They needed elevated interest rates. They needed all this stuff to occur. And without it, they would have failed by now because they had run out of monetary policy. Let's go check out this super chat. Super chat. Bravo Zulu, thank you so much for the $20. All right. And thank you for joining the channel. I'm gonna try and do a live stream, members only live stream tomorrow, talking about the the interlinking system of transactions that the Federal Reserve is now communicating about. And it almost, like, I read through it a bit. I didn't see anything talking necessarily about any particular like cryptocurrency, but they definitely talk about interlinking these together. And I know a lot of people are already thinking, one particular currency out there, right? So we're going to read that. We're going to break down what the Federal Reserve is communicating about that particular topic. And we will do that in a live stream, members only live stream tomorrow, Sunday, say, I don't know. We're going to do it pretty early, 8 o'clock, West Coast time. All right. 8 o'clock in the morning. So let's go check out some of these super chats. Okay, with the amount of disenfranchised young males in this country, they have to take us to war domestically or internationally is the only question. Remember, we are talking about central banking policy when we refer to the dollar policy. Crypto is still compared to USD, which is interesting. All right, in no way has USD been devalued. If you left US, you would see. What's very interesting about that is I've been outside the nation, traveled down to popular tourist areas in Mexico and been to Jamaica and stuff like that. My mom was really into traveling and she would get these really good trip deals and stuff like that. And so she would drag me along with her, which was awesome. And so one thing that I found is, the dollar was definitely prized more and you could get better deals if you were dealing with US dollars. Now, something that I found interesting was George Gammon. I don't know how many of you follow George Gammon, but he had recently done a trip through, I believe it was Argentina, talking with all kinds of local people there and trying to trade Bitcoin and silver, right, as far as his means of exchange to try and get through the nation. And he found that it was very difficult. Like, nobody wanted the silver and nobody wanted Bitcoin. And to be able to trade it over, even getting it into US dollars was, even if they had it in US dollars, it wasn't the dollars that they wanted. They wanted crisp $100 bills. Like, that was the medium of exchange that most of the people wanted. So, even regular dollars wasn't necessarily as much in demand as the local currency was. The crisp $100 bills were, right? Those were in somewhat of demand. So it was very limited in what it is that they could do. And they were at times very frustrated trying to make their way through the nation, knowing that, it was not as easy as a lot of people would anticipate it have been. Anyway, it was a pretty cool story to hear about. Our U.S. companies are just charging more. Coral Reef, our U.S. companies are just charging more. I don't know. I don't know about that. I look at the lumber industry. I don't know what any other industry to look at, man. That's it. I just look at the lumber industry. It's a major agricultural export for the United States. It's almost 100% domestic, right? There is a little bit of Canadian import and European import and stuff like that, but like 80% of what we do here in the United States for the lumber and wood production industry is domestic. Like, there is some export, imports from foreign nation for stuff. But I look at that particular industry and I'm watching these mills just fail like miserable right now, right? And I'm looking at all these people who are talking about, no, it's greed. They just hiked the price and they just kept it up and they're just keeping it up and all this other stuff and inflation isn't going away. And I'm like, inflation left lumber a long time ago, right? It's been gone for a while. And these mills are now shutting down. And now here's something I'm just going to add to this. I wanted to do a video just about this, but nobody will watch it, right? It's about the mass timber industry, and this is something you should keep your eye on because the mass timber industry is now really starting to step up. And for those of you who are wondering what the mass timber industry, it's also cross-laminated timber. It's building high rises completely 100% out of wood. And I'm talking like major apartment complexes, hospitals, schools, all kinds of institutions, what institutional commercial type buildings can all be built out of mass timber, out of these cross-laminated timber. The neat thing about this stuff is that it can all be fabricated off-site and then shipped into the location and put into place, which makes like all the environmental intense intrusiveness that has taken place on the exact location on the job site diminishes to just literally just craning pieces into place with very little like actual fabrication taking place on site. So all the fabrication taking place someplace else then really makes it a lot more of an efficient process to actually put these buildings together, right? And on top of it, it's also being sold as a green product. We've got all this green movement, whatever, if that's important to people, I don't know. Anyway, it's being sold as a green product in that you can lock carbon up inside of the wood, which then is now inside of this building. And unless the building burns down, which they have proven that the buildings are very fire resistive buildings, in which that even if there is a fire in one of the rooms or a location on this building, it chars the outside but doesn't necessarily burn completely through. They are very fire resistant, bug resistant, rot resistant. They have come up with or dealt with all the issues that are what would normally come across somebody's idea of like, nah, this isn't a good idea at all, you building out of wood. They've kind of solved a lot of those problems, including the seismic issues, which during earthquakes these things handle that very well. So all this like awesomeness about these cross-laminated timber industry is now coming to the building industry, to the commercial side of stuff. It's very much in its infancy right now. But you can see that it's happening. Even my local airport here, the Portland PDX, it's got a huge section that was just done out of this mass timber product. And it's being like, everybody's talking about how awesome and how like environmentally nice and sound it is with all these like, plant life and trees. And anyway, and that whole green thing getting pushed. Again, Portland PDX is a pretty nice airport to begin with. So this is just another addition to that, and it's kind of proving that the mass timber industry is growing and it's not shrinking. So now I think about that for just a minute, and it's like, okay, now hold on. Here you have the ability to take an inferior product and make a superior product out of it. Because typically the lumber that you use to build a house is a premium grade. It has to, even though a lot of times people are like, yeah, you shouldn't see the premium grades I got, right? But generally, it takes a particular type of tree to saw up into lumber. And it's not just any old tree that can work, right? You got to have what they refer to as saw logs, right? They have to be of a particular style, species, whatever, in order to make this, right? So it limits what those trees can be used for as far as being beyond the lumber use. With mass timber, it can use a lot of the inferior trees, and the product that is not capable of becoming lumber can become part of the mass timber product. So ultimately, it would take trees that can't be used for lumber and makes a building product that is more superior to the building conditions in which that are existing today. All right? So this is a pretty unique process. Now, something that I found as I was doing some research on this is that not only is like mills that are being shut down right now are being purchased by mass timber industries. Right now, I don't know how prevalent within the economy this is right now within the markets, but I definitely found one story of it, and it seems to me that this is probably going to end up growing more prevalent going into the future, and that is these mills that are shutting down. We have been reporting on this for some time now, the mill curtailments and shutdowns that have been taking place. I have a feeling are going to start being purchased by these mass timbers industries because possibly for the reason of one, right, there is an issue with the location in that the trees that are available aren't necessarily premium for sawing up, but they would be okay for making into mass timber. So this could take a region of forestry that has maybe been depleted and the trees are just further distance from the mill, making it harder for the mill to be profitable, but then to be able to take more from the forest that was not necessarily capable of being produced for lumber, but being able to be produced into mass timbers, and then revitalize that particular industry with this superior building product, right? Or opinion. I guess that's a superior building product is a matter of opinion. But anyway, you can see that happening already now taking place within the industry. Like I've already started reading stories of this happening. And another story that I also read was from down in California. A grant has recently been given to the production of a mass timber facility within a location in California that had seen extensive wildfire. Right? And so again, this extensive wildfire had pretty much destroyed like close to 1 million acres. And now they're thinking, okay, hey, if we build this facility in there, we could take advantage of all these trees that are maybe not as useful for sawing up into lumber any longer, right? The salvaging of it is maybe not as profitable considering the low lumber prices, but the trees may be salvageable into mass timber. Right? And so you can see how like this switch of thinking is beginning to take place within the industry itself. Now, I think to myself, okay, this probably makes a lot of sense anyway, considering like most jobs, manufacturing jobs, are depleting. And it would make sense that the fabrication of a home, the job within that, or at least these buildings, would also deplete along with all the rest of the manufacturing jobs that are out there, considering the new innovations that are coming. And that's what I see happening with this mass timber industry. If you think about it, how many people do you really need on a job site if there's no fabrication really taking place, but literally just the setting of things, setting of pieces, like, literally craning these little pieces into place, a few at a time or however much you can get a crew to work on a particular job site. But again, with no manufacturing taking place there or fabrication taking place, it's all off site coming to that location. You don't need as many construction workers. And again, like if you're doing this in a facility that is mass producing this stuff, most likely the automation that has taken place within those industries mean that you don't have a whole lot of jobs going on anyhow. Right? Or with that as well. So it's not like this is going to bring like mass jobs to the market. I'm not saying that by any means. But what I am saying is that this thing seems to be prevalent within the economy and within the industry that I'm looking at. All right, moving on. See, that would make a great video, but if I did a video just about that, then people wouldn't really watch it. All right, all currencies are in decline and people compare one falling currency to another to pretend one is strong. It's a delusion. I don't know. Currencies aren't meant to hold value. Like, so strong or weak or whatever, it doesn't really matter. It's meant to be a currency. It's meant to transfer value from one location to another. So from your goods and services to other goods and services. And that's all it's really meant to do. Germany is in full collapse. If things continue down the path they are going, the government's going to have to start setting housing prices. Why? I don't think they will. Like that property ownership and setting of prices and stuff like that is like the moment that you set prices inside of properties and property ownership and stuff like that, you are walking yourself right into a communistic nation. There's no other way of doing it, because it's free, independent, free market, and property rights to ownership in literally as much as you want, right? At any value, that is the freedom of America. Right. The moment that you deny that, then you are denying yourself the freedom of being in the United States and all the awesomeness that comes with it. Not that I'm saying that you're not that now, but I'm just saying that's one step towards the denial of what it is to be in a constitutional republic. Yeah. I mean, I'm not saying that's good or bad. I mean, actually, I am. I'm saying that's bad. I'm not saying you should think that's good or bad. I'm saying that's good. That's bad. But that there's probably not a lot else that's probably going to happen other than going down some kind of road like that. New tech is expensive. It only becomes cheaper when it's old tech. Yeah, that's true. And just like anything else out there, like I remember, this is what I thought was funny, is I remember the first hybrid vehicles that were coming out, and um I was talking to a lady who had one, and she's just like, yeah, it gets like, I don't know, it was 25 miles to the gallon in the city and 32 on the highway or something. And I'm like, that's it? So it drives off electricity half the time, right? And she was just like, yeah. And I'm like, it's like a regular car. That's not like, what the hell? This is like, what this doesn't make any sense. And I'm thinking, I remember my buddy had a Geo Metro when we were in high school. They got like 50 miles to the gallon. And, another friend of mine had a CRX that he swore got better than 50 miles to the gallon. And so I'm like, there was vehicles back in like the early 90s that would get an incredibly good gas mileage that just don't exist today. Like, where are the vehicles? I mean, you think about it. If in 1993, right, 92, 93, they had a car that would get 50 miles to the gallon. Today, they should have a car that gets like 100, right? It should get like 100 miles to the gallon, especially if it's running off electricity half the time. So I don't get it, right? I mean, it was just like, obviously technology is limited in some fashion, whether it's forced limitation or I don't know, just haven't gotten there yet. I just find that incredibly interesting that we still haven't succeeded in a vehicle that can essentially get as much traveling as you want out of it for no cost. It's because traveling should cost, I guess. They want to charge you to travel. All right. What is this? Brady says, government control of industries is not the answer. Yeah. Those Geo Metros were 3 cylinders and the CRX were incredibly light. Yeah, oh yeah, I'm not saying, I had actually had a Geo Metro at one time, and man, that thing was scary to drive, especially like, Highway 30 is a very, very dangerous highway, but like the 20-mile stretch going into Astoria on Highway 30 is like probably one of the most dangerous highways I've ever heard of. And it is just a constant mess there. And people try to pass in the stupidest areas. And so anyway, log trucks constantly on that highway, and driving that little Geo down that highway every single day for a while was very like, yeah, it was like you just might as well just be flying down that highway with nothing at all, like, Geo Metros looks like good for jumping in the snow. God, I love that little car. I just loved that little car. I miss it. My 35-year-old gets around 35 miles per gallon. My 17-year-old hybrid gets 42 miles to the gallon. It's more than paid for its premium and the hybrid tech. People have more money options. You think it's worthless here because everyone in America charges a lot. The Fed cut is going to increase inflation and accelerate a recession. Why would it create inflation? How does an interest rate cut, like, I don't know, let's say, I don't know, let's say a whole percentage point, that takes it to say 4.5%, 4.25 to 4.5% on the Fed funds rate. How does that produce an inflationary scenario within the economy that zero interest rate policy failed to do for an entire decade. Like, I mean, I'm curious, like, because I mean, I follow economic policy, monetary policy pretty close. And from what I can tell, quantitative easing one, two, three, and four had a psychological effect of inflation that was very persistent and very profound within the economy, but actually produced very little inflation, right? Quantitative easing one, two, three, and four failed to produce the inflationary scenario the Federal Reserve was looking for. They actually had to change the way that they view inflation, going from a 2% target to a 2% average inflation rate over time, knowing that they would have to have inflation that was moderately above 2% for some time. I mean, again, I encourage everybody, got to take this thing into consideration and monetary policy strategies for a low neutral interest rate world. You don't believe me when I say this is what he says. The second option is average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation rate in good times, when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times, so that the long run average inflation rate and inflation expectations are well within the target. That's exactly what it is that Jerome Powell said we are now conducting ourselves in as far as their monetary policy, stated back in August 27th of 2020 in a Federal Reserve speech, right? And so understanding that they knew that monetary policy had come to an end, that the idea of a zero interest rate policy that was supposed to create a hyperinflation scenario failed to even produce a 2% target, right? Like, it failed to even do that. They couldn't even get, like, failed to produce a hyperinflation scenario. Shit, they couldn't even get to the 2% target with it, right? It didn't work. It doesn't work. Interest rate adjustments don't work. It's failing. It's failing because of a low neutral interest rate. And that low neutral interest rate is something that is very, very infrequently discussed. Right now, I found an article just recently talking about it, but I got to do some research about some things that were stated within the article, because it almost seems like either the article is wrong about the viewing of the neutral interest rate, or I've been viewing the neutral interest rate wrong. So I got to do more research to make sure that it was me who's viewing it wrong before I come out and accuse the article of viewing it wrong, right? So in understanding that the neutral interest rate is the major problem that the Federal Reserve was facing, and that is the interest rate that is neither accommodating nor restricting the economy, had come very close to zero. And so if they wanted to, like, if you have a neutral interest rate that is just above zero and you want to stimulate the economy, you drop interest rates down to zero and you haven't dropped very far below the neutral interest rate, you're not going to stimulate the economy. What it'll do is it'll create what should stimulate the economy. You will see the jobs market get incredibly tight, low unemployment, because all this low interest rate has companies borrowing money to then move into investment, meaning that they are going to build, they are going to buy equipment, they are going to hire people, and you are going to see that incredibly tight jobs market with a low interest rate environment. The only problem that is faced from that is that if you have a low neutral or a low interest rate environment, what you are going to have is a return on capital investment that goes negative. Meaning that if you put your money, your capital, you deploy your capital to an investment that has a low interest rate, by the time you get the return on that capital, it may not have beaten inflation. Even if you have a low inflation environment, the low interest rate or the low return on your capital investment didn't beat the inflation. You are actually getting a negative return. And this was taking place within a low neutral interest rate world, and part of the problem that the Federal Reserve was facing. And that's very complicated stuff. I get it. I understand that's complicated. I've gone over this information 4,000 times. So I've got it internalized. I get it, right? And I understand that a lot of people are like, what in the world, man? You just blew past everything that I could ever understand as far as what the Federal Reserve could ever kind of communicate to me. I understand that's a problem for a lot of people to hear. But think about it for just a minute, right? If you cannot lower interest rates enough below the neutral interest rate, that rate that is neither accommodating nor restricting the economy, you're not going to be able to stimulate the economy. The belief that comes from the idea of money printing and expansionary pressures and all that other stuff has a very, very profound impact on the economy. Very profound. And this is really where the monetary policy is now being conducted. Right? Yes, the interest rate policies, the movement does have an effect on the economy. It absolutely does. What has more of an impact is the idea, the inflation expectation, and what it is that is coming from the idea of those interest rate movements. That is really the monetary policy. Right? It's difficult. It's so hard to see. Right? And so again, if the Federal Reserve drops it out one whole interest rate point, they're still going to be well above the neutral interest rate, and it's still going to be restrictive. Right? However, we look out there at the economy, and the longer that the inflation expectation remains elevated, what you are going to find is that the neutral interest rate will begin to rise. It is very slow. It is, and it's hard to witness because there is no actual way of viewing the current neutral interest rate, what the Fed refers to as R star, right? And now, again, trying to discuss what R star is and how it is that the Federal Reserve comes up and views R star is one of the most complicated things that I've ever tried to wrap my head around. And so to understand that R star is literally a view of what it is that inflation expectation has on the economy today and how it is that they view inflation expectation considering what the current inflation rate is. And they come up with this mathematical formula for figuring this all out. And they say, okay, this is the R star neutral interest rate. But they don't really know. They won't know until time passes. And then they look back and they say, okay, well, that was the neutral interest rate back then. Right? And that's it, and it is one of the strangest things to think about as far as trying to understand what it is that the Federal Reserve is going to do with monetary policy if you can't witness what the damn neutral interest rate is. It's so like that right there loses most economists, most people who are trying to follow the Fed. They just can't hold on to it anymore. They're like, that's it, man. I've lost it. I can't understand anymore beyond this. Right? However, it's very important to understand it. It's important to understand and internalize that information because that is what the Federal Reserve is looking at. It's one of the things that I try to break down on a regular basis on my channel. I understand that I'm just some dude in a 99 Ford Explorer that people like to make fun of and call homeless and stuff like that. Whatever. Hundreds of speeches later, right? Many documents, links down in the description. I don't make stuff up, right? All the stuff I have backing to say, everything that I have ever talked about, I have a link to prove it, right? And when it is my opinion, you know it's my opinion. But think about that. Like today's economy is not that of what it was when most economists who are discussing it understood it, right? Like they come from a time in which that interest rate adjustments had a very profound impact. Right? They came from a time in which that interest rate adjustments weren't even announced until they had already happened. Like nobody knew that they were even coming. Many people couldn't even understand the Federal Reserve and the things that they were communicating. There were people out there who said that it was an impossibility, like they could not articulate in any kind of reasonable fashion any kind of thing that was going to be coherent, right? Like they just didn't want you to know what they were up to. Now, look at all the communication that's out there. Everybody talks about the Federal Reserve. Everybody knows what the Federal Reserve is up to. There is not a single person out there who's looking out there at the Federal Reserve and their future interest rate cuts as a possibility. They're looking at it as a definite 100% market certainty into it. But yet, if you listen to the communications from the Federal Reserve themselves, they have promised not. Right? Data dependent. They always lead themselves in out because that's the forward guidance. That's the economic power that they have is the words that they use. Look at what it's doing to the economy right now. I haven't done anything yet, but look at the profound impact that it's having. All right, moving on. Well, we got 49 minutes into this. You guys having fun? If you're having fun, go hit that like button. We're at 130 likes right now. If you can get it up to 200 likes in the next 10 minutes, and I'll stick around. Otherwise, we'll end this at an hour. All right. Let's cruise this back up here a little way. CPI data is cooked. Come on, you know it. Oh yeah, I don't listen. Go back and look. Have you ever heard me really talk about the numbers? Like not really. Like I use like the Fed funds numbers and I kind of like, talk about the inflation numbers a little bit, but I don't come out and like the CPI was this and that and the other thing and the number, blah, blah, blah. I don't do that. And the reason why I don't talk about the numbers is because of FASB 56. Now, I've done a video on it. You can find it. It was one of like within the first year I started my channel. FASB 56, FASAB 56, right? And it's legal lies. This is where the government can literally make up the numbers that you are seeing out there and cover up the real numbers for national security reasons. And they've stated this. They said, this is what we are doing. Not possibly, we are, right? This is going to happen. We're not going to tell you that you're doing it. And we don't know, and you don't know what numbers are going to be on. Okay? So just understand that all the numbers could possibly be fake. And that's it, man. Like once I heard that, I was like, okay, so I can't follow the numbers anymore. Like that's not a real thing. It's a number to give you an idea out there, and they say that it's good enough to do your investments and retirement portfolios and whatever, it's good enough to do business with. But they're not necessarily the real thing. And I'm thinking, well, that doesn't work because I'm an economist. I'm not an investor. So this is a different tune that I'm looking at, right? So if you're going to say that and that the numbers aren't real, then I'm not going to look at them as real numbers, right? The way they move in the amount, I think is fairly accurate. So it may not be the real number itself, but if you're tracking it, if you're following it, the direction in which that it goes, and by the amount that it goes, I think is a fairly good way of following it. Now, again, that may not be nearly as accurate either, and I'm not saying it is, but if there's anything out there to follow, I think that would be it. Would be the movement of it and not necessarily what it is itself. Right? And so with that in mind and understanding that, all these numbers and all that, it doesn't make any difference to me, right? It's not, I don't look at it as real or fake or what it should be or that they should look at it differently. Hey, this is the way they look at it. This is their monetary policy. It ain't mine, right? I mean, I didn't say, hey, here's monetary policy. You got to conduct it this way. I didn't do that, right? That ain't for me to do. It's their monetary policy. Right? And they say, this is what we're looking at. And this is how we view it, whether you like it or not, right? And that's ultimately what it comes down to. Is like, you're right. It doesn't matter whether I like it or not. It is the way that you view it. And since you view it this way, then I have to view it this way. Because I have to understand what it is that you plan on doing with the information that you are viewing to do your monetary policy with. And so if I can understand it the same way that you are viewing it, whether I agree with it or not, doesn't matter, right? As long as I can understand how it is that you are viewing it, then I can understand what it is that you are going to do with your monetary policy on account of the way that you view it. Most people look at it and say they're viewing it wrong. They don't know what they're doing. They're fucking it all up. All right. Yeah, that's all right. I don't mean to cuss. But anyway, they look at it in that way. And then they say this is how they're screwing it all up. And this is what they need to do. And this is if they can, and I'm thinking, no, that's not the way to look at it. Right? Because if you're looking at it that way, you're looking at it with an expectation. And if you're putting an expectation on there, you're putting an external. And if you're putting it out there in an external, you're most likely going to end up very disappointed on the results from that. Okay? It's better to understand the information for yourself and to say, no, I get it. You're looking at it. I might disagree with the way you're looking at it, but I don't really care. It doesn't matter the way I look at it. It's the way you're looking at it and the way I'm going to know that you are going to conduct yourself on account of the way that you are looking at this. That's the way I'm going to do it, right? And then I put my understanding of that into my understanding of what macroeconomics events are happening out there and hopefully position myself in accordance to what it is that I need in my life, all right? And that's how this is all done. All of it. This is the whole point of the whole channel was the last 2 minutes. God, it's getting hot in here. Nope, I'm not reading that one. Okay. Everyone is already trying their best. I don't think so. I don't think everyone is already trying their best. I think people at times do an incredibly good job for a moment of doing their best. But I don't believe that people are doing their best. I don't believe that they are, from the time that they wake up till the time that they go to bed, in the pursuit of excellence. I think that they pursue excellence for 8 hours a day, and then for the rest of their time, they enjoy the pleasure from pursuing that excellence, and then they defeat all the excellence that they had pursued. That's what I think. All right? And now I understand that some people are very misfortunate in life and what happens to them. Like, we all face, unforeseen circumstances that we can't control. Like, I get that part of things, right? But for the most part, everything that I look in my life that says, man, I was not doing well, I was failing, I was all that, it was because I wasn't pursuing excellence. I was pursuing pleasurable things, right? And being lazy and sitting around and not doing anything is chasing pleasure, believe it or not, right? But if you're in the pursuit of excellence, if you're in, the growth stage, trying to start a business, trying to figure out how to, get out of alcohol, if you're trying to figure out how to do like all the things in life that is going to be what is the pursuit of things that are better, right? Doing better things in your life. When you do that, the natural results is pleasurable things. Like you can't help, it's like, it can't help it. If you are providing the world with a usefulness, you are doing it honest and authentic, and you're doing it in a very consistent fashion daily, right? Then it's almost as if, like, the natural consequences of it is being hit with abundance. It's like, it was funny because I was talking to my wife about this the other day, right? Or actually earlier today. And we said something about like freedom is just another word for nothing left to lose, right? And you think about homeless people who really, they're on the streets, they have nothing, they have like, no responsibilities, they have nothing that they really have to do with their day or whatever, they're just there. So, and all of a sudden, we kind of thought about it, and it was just like, you know what? They're in the abundance of being able to chase excellence. They could do anything, like anything that they do that is in the movement of growth or betterment is in the moment of excellence. Like they've been failing to chase excellence their entire life, and all they have to do is just put a little bit of effort out there, right? And they would be immediately into the pursuit of excellence. And the results that would come from it would be immediately and probably fairly profound, right? Because they haven't been experiencing anything that would be a result of excellence. So if you chase excellence in any kind of fashion at all, the results of it would be quite profound, right? Now, people who have been chasing excellence their entire life, they don't recognize it as much because it's a constant form, right? So it's a familiar, and they're just used to it. And so, you got your businesses, you got your rental properties, you're figuring, I've worked hard to get in my position, and you don't really think about it much. And you don't think about the abundance and the excellence, the pleasurable experiences you got from all the excellence that you had chased from all that hard work throughout life. But if you think about it from somebody who has done nothing their entire life, like zero, they have none at all. The moment that they switch that mindset, right, from being not pursuing of anything, being stagnant, to all of a sudden, hey, I'm going to do better with my life. I'm going to pursue things that are going to be worthy. I'm going to do things that are going to be useful. I'm going to, be in that mindset, and I'm going to do that from the time I get up to the time I go to bed. Can you imagine, like, the immediate, like, movement into, like, excellence all around, the pleasurable experiences all around from that sort of move into excellence from that sort of level, right? Like, if you already experienced it, it's no big deal. But if you never did experience it, it would be the most amazing feeling you've ever had. Yeah. And that's where I think a lot of people miss it in life's journey in general, is that mindset of always being in the pursuit of excellence will then surround you with all the things that it is that you need. It's like it can't help it to happen. Right? But most people look out there and they have an expectation. They put it out there saying, man, if there was a different administration, if I lived in a different city, if I had a different, relationship, if I, they have all these excuses they put out there, and it ends up being an external thing, right? But really, if you look down inside, deep down inside, the things that you are doing is either chasing pleasure or you're chasing excellence. And when you're chasing excellence, the I shouldn't say consequence. I say consequence because that's like, kind of the opposite, but the results of it, I should say, is a pleasurable experience, because chasing pleasure has the natural consequence of pain. Like anytime you chase pleasure, you will experience pain. You'll end up in debt. You'll end up hungover. You'll end up angry. Whatever it is. If you were in the pursuit of pleasure, you will find that whatever it was that you were chasing as far as pleasure will have an equal result of pain that is as a result of it. And just think about it, drinking alcohol, right? You're hungover, eating a bunch of, food or whatever, you're all bloated from it. Just like, it doesn't matter what it is, man. Chase anything that is, mass pleasurable experience, and you're probably going to end up resulting in some sort of painful experience out of it. Like even just being in debt, like, or less money. Now you have to work because of it or something. Alrighty, we are at the 100 mark with 169 people. You came close. Thank you for trying, but we got to 170 people. We're going to cut it right there. I appreciate everybody who's joined in on today's live stream. We got 304 people watching. Went through all this talk about interest rates and neutral interest rates and life lessons and all the other stuff that goes with the Uneducated Economist stuff. And I really appreciate everybody being here. You all are amazing. And thank you, All Nighters says, thanks, Simon and everyone. You don't even have a free market. Yeah, we don't. Alrighty, guys. Brody, for everyone's action, there is an equal and opposite reaction. Yep, that's right. All right. I thank you, Central Africa, $5. They don't know what they don't know what to do with it. You're the best. All righty, guys. You're awesome. Thank you so much for being here. Come back tomorrow morning for the members-only live stream where we will be breaking down recent Fed speech. I think it was Christopher Waller talking about the interlinking systems of transactions coming to the future and, what that might look like. So anyway, $1 a month to join the channel. Link is down in the description. You'll have access to a bunch of member-only videos that we have done, which we have broken down many speeches. The other link down in the description I like to encourage people to go check out is Cantillon's essay on economic theory. There is an affiliate Amazon link down there. So if you go and buy this particular essay off of Amazon and you follow that link, I will get a little bit of a commission off of it. But you do not have to buy this essay off of Amazon. You can get it for free at the Mises Institute. So I encourage everybody to go and check out Cantillon's essay on economic theory. And if you do not happen to buy it off of Amazon, to go get it for free at the Mises Institute and go and read that essay. Chapters 6, 7, and 8 of part 2 of that essay are incredibly telling. The increase and decrease of money to the state. I encourage everybody to at least read those 3 chapters. If you don't read the entire essay, at least go through those 3 chapters. Very, very telling. What else do I got? I think that's it. That's enough self-promotion. All right. Uneducated Economist. You guys let me know.